I mean, I have a very hard time thinking that we're going to get a 200% move up here from that one. But as you see, the logarithmic regression, the channel is becoming tighter and
Yeah,
tighter.
it's
So
pointing to
even if
around
we
250, maybe 260 if I kind of project where it's going to go there. So you're looking at
yeah, long term, like
150. Yeah.
long-term target, if we get an explosive move to the upside, I would be looking at somewhere between 200 and 250 if I had to give an estimate of that. The very more conservative target is sitting right here at 100, around 150. So 150, I believe, is the conservative target. That's the worst case scenario, and the best case scenario probably sitting around 200 to $250,000 per Bitcoin, unless we enter a super cycle that is not going to stabilize the price of Bitcoin, but actually accelerate the current cycle that we're in right now, which I think is highly unlikely, but possible.
Yeah, I've got that super cycle kind of edge in the back of my mind, when we look at the Dixie, I'll bring up my chart real quick so you can see what I mean there. So if you look at the Dixie on the macro time frame, so this is weekly, and I can actually scale this into a monthly time frame. So we do know that, with Bitcoin, it's always when the Dixie starts pushing upwards, that's normally when your bear happens. And so the Dixie goes up, Bitcoin does bad. The Dixie goes down, Bitcoin does good. So there was Bitcoin's bottom, and this is now where we're at right now. So if we look at the channel long term, Bitcoin has been still stepping up, regardless of the fact that the Dixie was, trending bullish on a larger time frame. But with all the US and the uncertainty with this, the security of the dollar and everything, what if we find ourselves into another one of these where this is just the beginning of a long term that? And that then opens the door for that super cycle idea in my mind from a purely technical analysis. Not looking at a fundamental, but just looking at the mechanics of how these charts normally correlate with each other. If we do have that channel and we do have that break, because we're right at that critical point right now, and we start moving below these levels, it could fuel that super cycle idea. What needs to happen fundamentally? I don't know. I don't try and predict into the future, but there is that TA to kind of support the idea for something like that. But as we do on this channel, we take things level by level. We don't try and predict too far ahead of ourselves, because a prediction can get your fingers burnt. Let's have a look at
So
a few questions there, Jonathan. We've got a question from Anant. To save the dollar, do you think that the US can dump their gold in the open market to crash the prices or the prices, whereas instructing stablecoin companies to invest in Bitcoin?
no, that's highly unlikely. The dumping, dumping gold for the dollar would definitely damage the U.S. credibility and global confidence rather than strengthen the dollar. So no, I mean dumping the dollar on the market. Um, no, I think that would be more stabilizing to the dollar in the market than doing anything to save the dollar. The dollar doesn't need saving. I mean, dumping the dollar would absolutely crash the dollar. The dollar does not need saving. I mean, the dollar is at like beautiful high time frame support. I'm going to show my the dollar currency index high time frame analysis right here. Now, I am bullish on the dollar, and I am looking at the dollar. I mean, we're in this channel, right? So we're looking at the 15-year channel. This channel has been created since the financial crisis in 2008. We can see that
Yeah, it's
the US
similar
dollar
channel
has.
I've drawn just now.
Yeah, so this is the channel that where dollar has been created. The major lows historically. Now, this is important in the aspect context of Bitcoin, because Bitcoin was created because of the financial crisis in 2008. If you guys remember, you look at the Bitcoin, the first Genesis block of Bitcoin, block number 1, you have an article in there saying that the UK chancellor is is going to bail out the banks, and that's the reason why Bitcoin was created, because you cannot bail anyone out on the Bitcoin blockchain. It's a deflationary currency. You cannot print more Bitcoin. It's mathematically locked at 21 million tokens, and that's the fundamental beauty of Bitcoin. Anyway, so this channel, very, very important for Bitcoin. Now, what we can do is we can actually go up and we can add Bitcoin to this chart. And what you're going to see is something that, now again, remember, this is based on a 4-year cycle. The 4-year cycle, I believe, is dead. So it might not make a lot of sense, but it's still important from a technical point of view, because what we're doing as technical analysis, or as chartists, we're looking at past price action, and based on past price action, trying to predict future price action. So this is Bitcoin right here. Is this Bitcoin? Where is it? Okay, we got the log scale.
Bitcoin, but it's on log.
So let's see. That's the log scale. So if you look at Bitcoin on the logarithmic chart and dollar on the arithmetic chart, you see that whenever the dollar prints a low, this channel kind of like follow each other perfectly. So low on the dollar, top on Bitcoin, low on dollar, top on Bitcoin, same thing here, same thing here. Will it happen here? I think it's time for this pattern to break. I think the dollar will be moving higher. Bitcoin will also be moving higher. And if it's not moving higher, it's not going to create a top that looks like, we're not going to go down here. We might just start ranging and stabilizing around this area as part of the new 4-year cycle, which means if that's the case, and we do enter a new super cycle, building a long-term base here means potentially a bigger, slingshot to the upside while the dollar starts topping out as well. But I am technically bullish on the dollar. Not sure if I'm very bullish on the dollar, from a fundamental point of view, but I am a technical analyst. I do follow price. Then if we do have a breakout here on the dollar, because I do see that we're potentially in a accumulation phase right here. If we do break out, maybe retest and start moving higher, that's a bottom on price, no matter what fundamentals are telling you. You can have your fundamental reasons for being bearish on the dollar, and you can have that bias all the way to the top, but price doesn't really care what you think. It's just going to keep moving anyway. So I'm looking at that potential break out of that accumulation phase on the dollar, and I believe that's time to be potentially cautious on the equity markets, but not necessarily Bitcoin, because Bitcoin is actually, I believe, some of this rally we're seeing in Bitcoin is being fueled by the same principles that is gold fueling gold. But then if the dollar puts in the bottom here, then what about that debasement trade? So there's a lot of different things to keep your eyes on here that can happen, but I honestly think that following price first, and then verifying price movements with fundamentals is the best and simplest way to prepare for shifts in the markets.
I think what I can add on to that is we've got a rule. You use fundamentals and technical analysis to look for a buy. So Bitcoin, what is the fundamental driving force behind Bitcoin? And then you use technical analysis to say, well, where do we measure the risk? Where do I invalidate whether the good fundamentals is there? Because if you look at the chart, point to any of the previous Bitcoin highs, fundamentally, there was nothing wrong with Bitcoin at those highs. So why the bear market? And that's where technical analysis is a necessary addition to your bags, because you need to have both risk management and the fundamentals behind that, and then take things level by level. Don't get hung up too much on the larger picture of things, in the sense of fitting to a narrative. You want this to happen in order for that to happen. Because if something just doesn't quite fit your picture, you might end yourself up, what we said earlier, being outside the market instead of being in the market. Let's have a look at another question. So nicely, really thorough answer there from Jonathan. Well done. So let's have a look at Henry's question, and maybe you can have it. You're talking about what structural shifts, technological, regulatory, or geopolitically, are most likely to redefine the role of cryptocurrencies in the global finance by 2035. That's a very, very good, but a very, very far out there question regarding time scopes. Jonathan, do you have anything
All right.
you want to add to that?
Yeah, that's a great question. So we can start with the let's keep that comment up, and we can start with the first
First part.
technological. So we have 3-part question: technological, regulatory, and geopolitical. So obviously, looking at global finance in 2035, that's 10 years from now. Looking at it from a geopolitical point of view, that's going to be really, really difficult to think about. Obviously, what's going to happen in geopolitical space in the next 10 years. But if you look at the technological space, obviously that's going to be AI and quantum computing. So in the next 10 years, we have potentially 2 of the biggest technological breakthroughs is most likely going to be AI and quantum computing. So how is that going to affect Bitcoin and cryptocurrencies? And I think AI can really help propel the cryptocurrency market for sure. But quantum computing is another question, because that could potentially be problematic if you have powerful enough AIs working with quantum computing in the next 10 years. If they in some way solve what is it called? The underlying thing that kind of drives the whole blockchain and makes it secure. It's called encryption. That's right. If they start working towards breaking encryption, heavy encryption that most of cryptocurrencies are based on, then we have a very difficult time, as investors in the cryptocurrency space. And that's actually 2 of the biggest worries that I have for cryptocurrencies is if we have powerful enough AIs utilizing quantum computing, how is that going to affect cryptocurrencies?